Good evening. Welcome to our special coverage, Budget 2023. All eyes on Finance Minister Nirmala Sitharaman as she presents the Union Budget for 2023 in the Lok Sabha tomorrow. While there is great news in the foreground, India is the fastest growing large economy in the world. The economic survey presented today predicts 6.5% GDP growth in FY24. Tax collections, both direct and indirect, are extremely buoyant. But there are headwinds. Everyone is talking of a looming recession. There are tech layoffs. Inflation is still outside the comfort ambit of the RBI. How will the finance minister walk this fiscal tightrope? We'll have a very, very special and top-notch CII panel that will be joining us during the course of this budget coverage. But first, the story so far.
भारत के बजट के तरफ न सिर्फ भारत का लेकिन पूरे विश्व का ध्यान है। सबसे पहले देशवासी। ये बजट सत्र में भी तकरार भी रहेगी लेकिन तकरीर भी तो होनी चाहिए।
हमें 2047 तक ऐसे राष्ट्र का निर्माण करना है जो अतीत के गौरव से जुड़ा हो और जिसमें आधुनिकता का हर स्वर्णिम अध्याय हो। हमें ऐसा भारत बनाना है जो आत्मनिर्भर हो और जो अपने मानवीय दायित्वों का पूरा करने के लिए भी समर्थ हो।
Why is the economic growth going to perform better this decade, remainder of the decade? And what the reforms of the last 8 years have done to make sure that happens? As we look ahead to 2047, what else and what more we could do to realize India's full potential in the Amrit Kaal?
So just to set it up and put it into context, the Indian economy over the last couple of years had taken a bit of a beating. First it was the COVID-19 pandemic, then there was the Ukraine war and its ripple effect on inflation. But it is now well and truly getting back on track, and it is proof in the economic survey that was tabled today in Parliament. The first big headline is that the survey forecasts a baseline GDP growth of 6.5% in real terms in the fiscal year 2024. This still makes India the fastest growing big economy in the world. More money is likely to flow into India as advanced economies face recessionary tendencies, whether it's the US, UK, etc. So the Indian economy is recovered much faster post the pandemic than many of its Western counterparts. The economic growth will be spurred by solid domestic demand as well as a pickup in capital investment. Both have been cited in the economic survey. On a cautious note, though, the domestic demand is strong amidst high commodity prices, which could lead to a widening of the current account deficit. That is a matter of concern at 4.4%. It could put the rupee under pressure. This is what the Chief Economic Advisor, Dr. Anantha Nageshwaran, had to say after the tabling of the eco-survey.
What are the key messages, as I mentioned in the initial remarks? Why is the economic growth going to perform better this decade, remainder of the decade? And what the reforms of the last 8 years have done to make sure that happens? And beyond 2030, what will be India's medium-term growth magnets? And finally, as we look ahead to 2047, what else and what more we could do to realize India's full potential in the Amrit Kaal?
Meanwhile, a day before the Union Budget, the International Monetary Fund has given a huge shot in the arm to India, projecting it to be the fastest growing major economy for FY24, retaining its forecast at 6.1%. The IMF has cited resilient domestic demand despite a challenging external environment. It is expected to slow down from the current 6.8%, that was the estimate for FY23, and then rebound again back to 6.8% in FY25. China's growth rate, which used to be the fastest growing economy at one point of time, the second largest in the world, has been projected at 5.2% in 2023. That is slightly up from 3% in 2022. It's also predicted, the IMF, the United States growth rate to slow down to 1.4% in this year. It was 2%, so from 2% to 1.4%, a fall of about 0.6%, while the UK would see negative growth of 0.6%. This is what the IMF is predicting for 23 and for 24. Now, since this is the last full-fledged budget of the Modi government before the big 2024 elections, expectations amongst the common man is very high. Top of the list is an increase in the basic exemption limit for taxes, for income tax that is, 2.5 lakh rupees. That's where it's remained since the Modi government came to power in 2014. Will that be changed? Next, of course, a hike in deductions. The limit currently for ATC is at 1.5 lakhs. Will that be increased to 2 lakhs? Also making the new personal tax regime, which was introduced in 2020, a little more lucrative. As of the last financial year, the number of tax assessees, over 6 crore of them, a large majority are still using the old tax regime. The exemption for interest paid on housing loan is currently capped at 2 lakh rupees. Will there be a bid to try and amp that up so that there is a bid to revive the housing market? The standard deduction that's been allowed under the old regime is currently 50,000 rupees. The hope is that that will be upped as well. In light of the pandemic, a tax-free allowance in respect to work from home could also be potentially introduced. There is also expectation of leave travel allowance, which is currently allowed for a block of 4 calendar years, getting extended perhaps to a couple of years, even every year. Female taxpayers who were given an additional tax slab exemption by an enhancement of 50,000 rupees, that limit could likely get amped up as well. These are the expectations. The GST rate on health insurance currently is at a relatively high 18%. The hope is that that would be reduced. Also, the inclusion of additional documents in DigiLocker will increase user convenience and help in the quick, secure and transparent digital issuance of credit. So we talked about what the Aam Aadmi's expectations are. What about India Inc.? What does corporate India want from Budget 2023? Now that the economy has recovered from the pandemic, there is increased focus on job creation. Of course, the PLI schemes as well as the employment-linked schemes, that is something that there will be great hope for. There is also great expectations that this budget will help fuel growth across sectors and industries. Remember, we have seen what many are calling a K-shaped recovery. People are expecting a slightly more egalitarian recovery, if you will. As well as further simplification, rationalization and ease of paying taxes. That is something that India Inc. is concerned about. They would also want the government to stick to fiscal discipline. Remember, the fiscal deficit target for this year that has been budgeted is 6.4%. Will the finance minister be able to keep that? Will she be able to beat that? That is also a big question. They also want to continue the strong thrust on public capital expenditure. Remember, the infrastructure pipeline of 5 lakh crores. How has that played out? Both in highways, railways. Of course, that is something to watch out for. The hope is that private investment will crowd in and give an overall boost to growth. India Inc. also wants to improve the quality of social infrastructure, particularly in health and education. Now, while expectations are high, the finance minister has her task cut out. There are one too many challenges. The first, of course, is inflation. Remember, it's already above the comfort ambit and the tolerance band of the RBI, which is 6%. Then there is the task of checking the declining value of the rupee. The rupee was one of the worst performing currencies in 2022 against the dollar, losing more than 10% of its value. Private investment needs to be promoted, needs to come back in a big way to what was there pre-pandemic levels to try and spur growth back once again. And finally, there is, of course, the challenge of job creation. Can the finance minister find ways and means to create the 2 million jobs needed per month so that the large population of young people get meaningful employment? Let me now open this up to our full CII panel that's joining us this evening on our special Budget 2023 coverage. Sanjeev Bajaj is CII President and Chairman and Managing Director of Bajaj Finserv Ltd. Sanjiv Puri is CII Vice President, Chairman and Managing Director of ITC Ltd. Chandrajit Banerjee, DG CII. Dinesh is CII President-Designate and Executive Vice Chairman of TVS Supply Chain Solutions. Suchitra Ella is Senior Chairperson of CII and MD of Bharat Biotech. Let me start with you, Mr. Sanjeev Bajaj. First things first, and this is a question that's asked of the Finance Minister before every budget presentation. How much fiscal room, how much elbow room does she have? Yes, on the growth side, and I said this, the foreground picture is very rosy. India is the fastest growing large economy. The IMF is predicting that. The economic survey that was tabled today is also predicting that. but how much elbow room does she have for the big ticket reforms that we've all been waiting for?
Well, with this government, what we have very clearly seen is no let up on development and reform. And naturally, we have to balance growth with fiscal prudence, which means the government needs to also augment its resources, whether it's by stronger divestment, whether it's by expanding the tax base, by rationalizing tax rates, tax slabs, making the tax rules simpler. But we also need to focus on growth, and that's where our economy has been aided in the last few years with very strong public infrastructure spending. We hope that continues. We hope the focus on job creation, that continues. And rationalization of income taxes, especially at the lower income segments who have suffered the most through the pandemic and borne the brunt of inflation. We hope that we are able to put some more money into their pockets to provide security and also to help in additional consumption, because we are also very much a domestic consumption driven economy. So these would be some of the key initial points that I'd like to mention.
All right. Mr. Sanjiv Puri, in the sectors that you're involved in and your companies are involved in, whether it is in hotels, in transportation, in FMCGs, in all the service touch points, are we seeing demand, domestic demand, come back to more or less where it was at pre-pandemic levels? Is there more that you expect from the finance minister on these service touch point areas, as it were, to try and spur domestic demand? Because like Mr. Bajaj said, we are largely a domestic demand or a domestic consumption driven story.
Yeah, I would certainly agree that, and especially considering that the global situation is not conducive, that there will be a larger reliance on domestic demand. That there's no doubt about that. And we have seen that private consumption has picked up. There is some data in the economic survey that is encouraging. I believe there's a lot more opportunity in each one of the sectors of the economy, whether it's agriculture, services, or manufacturing. And, if you look at services itself, if you look at the hospitality industry, after a very long period, it's doing well. Tourism is buoyant. Mm-hmm. And I think that given that a lot of Indians, and actually the outflow of tourists from India is much higher than the inflows.
Correct.
So a lot of us had opportunity to experience India. I think that is going to sustain. That's going to sustain. And remember that so far, the international tourists have not come in full measure this year. It's picking up. But that's an opportunity. I think the G20 is an opportunity.
Correct.
And of course, broadly, India has a lot to offer on tourism. We can actually multiply the amount of tourism, both inbound as well as domestic tourism. There is a tremendous opportunity. I think on the services side, the tech industry is going to remain resilient. I mean, the whole world is going the tech way, the digital way. So there may be small, short periods of time when there are ups and downs, but that's going to remain resilience. That plays to our strength. And we have the demographics and the skilled manpower to support this.
Okay.
Agriculture is another area. Agriculture has been resilient. But I think there is a lot more opportunity. And what we see in the economic survey is that some of the very fine interventions that have been made, I mean, just to call out a couple, like the FPO or the Agri Infrastructure Fund. Now, these are the building blocks of transforming agriculture. We are starting to see the uptick. We are starting to see that there is uptick and resources are being taken towards that. Mm-hmm. Now, we need to it's working. And what we now need to see is how can we galvanize greater and faster action.
All right.
So can we do it? One of the ways is through a cluster-based approach, which is crop-specific, which is market-specific, and we can really build on it. And half of India's workforce is in agriculture. That can have a tremendous multiplier impact on the economy, correct, create a virtuous cycle. So I think all of these are opportunities. In manufacturing, we have seen that even the PLI schemes are making impact. Mm-hmm. You see, there is investment coming. There are jobs getting created. It was there in the economic survey. So the opportunity is perhaps to see where is the opportunity to broad base to more employment intensive sectors.
Okay, let me go across to Chandrajit Banerjee and talk about the headwinds, of course, are in the form of the current account deficit, and of course, there is the fiscal deficit as well. And I'll just run through the numbers. On the fiscal deficit side, the projection that was made in the last budget was 6.4% of GDP. By December of 2022, we're already touched close to 10 trillion. So which is, we're basically have reached almost 65% of what the projection was. Will she be able to manage to keep the fiscal deficit within that range of 6.4% of GDP? And the bigger concern, Mr. Banerjee, is on the current account deficit, which as of Q2 in the current fiscal year touched a record almost of 4.4% of GDP. We are seeing a softening of exports. Imports are pretty much stagnant or increasing. So how much of a concern will that be, the fiscal tightrope walk that the finance minister will have to do tomorrow?
So, I think you put quite a few questions in one go, but I think that the budget should adhere to the fiscal deficit target of 6.4% of the GDP for this fiscal, and reducing the glide path that was talked about, reducing it to 6% in FY24 and then 4.5% to by FY26. And the budget should also target higher asset monetization receipts in FY24. As per the national monetization pipeline, by preparing an institutional backbone at the level of relevant different ministries. So that's very important. And you alluded also to the issue of current account deficit, which has been flagged at the economic survey, including the depreciation of the rupee. Now, although the global slowdown slows global trade, definitely, India's share being around 1.7% a couple of years back, that leaves a huge scope for boosting our shares in global exports. And you also touched upon export. And I think exports is going to be, the way we can really deal with exports is going to be very critical. Allocate more funds for creating, sector-specific industrial parks, so to say, with some very good world-class infrastructure, with some of the embedded, cost disabilities, which are very, very important. Today, we talk about export competitiveness. Mm-hmm. So similarly, funds for developing districts as export hubs, that would be very important. A lot can be done, allocating more sufficient funds for rod tapes, so to say. And we should also look at providing a strong export. The amount that is available for exports, the quantum of export financing, that has to be increased at competitive rates. And and given the elevated interest rates, the government could increase the interest subsidies from today 3% to 5%, but that's something that we should be thoughtful about. But MSME is the main exporting sector, as we know, and therefore more money in the hands of more money available for exporters is going to be important, and proper implementation of PLI that really helps in exports. That obviously will facilitate much more. So I would think that there is a huge chance, and you talked about the current account deficit. We should look at very strong FDI inflows into the country. Facilitate FDIs. There is today a huge focus on making ease of doing business, and that itself will enable more and more foreign direct investment coming into the country. That itself should be a very, very important area.
Let me go to Mr. R. Dinesh of TVS. They used to say that two-wheeler sales were a marker of demand, particularly in rural areas. Are you seeing rural demand coming back and the demand for two-wheelers coming back in a big way? As far as passenger cars were concerned, after the slump that we saw in 2020, there was a record year in 2021. What are the indications that you're picking up? Because as Mr. Banerjee also said, all companies, all manufacturing multinationals are now looking at a China plus one strategy. Is India doing what it needs to do right to make sure that India is that plus one?
Yeah, that's a very good question again. But if you look at this in two different aspects, right? One is obviously the domestic demand in itself. And I think post-COVID, we have seen a significant uptick. And of course, you do see a big difference from certain sectors having a much bigger uptick and vice versa. But if you look at it, the second part of the point, which is to see that I would call it, build this virtuous cycle of investment into manufacturing, thereby spurring domestic consumption, I think is a unique opportunity in itself. So I think there are two issues here. One is for companies to choose India. And I think definitely India is not just on the radar, but I would say very high up on the radar in terms of as an alternate to the +1. Mm-hmm. But the biggest advantage we have is our domestic market. So, that's why I said it's a, kind of a cycle which we can build up. Therefore, people invest for both the domestic market and an opportunity to export, which then gives I would call it double benefit to the country. So for us, I think we are ideally placed to benefit from both sides of it. I think we will have, considering the level of growth rates which economic survey speaks about, I think we are well placed to not just see rural demand, but also see, I would say, the whole of India benefiting from the domestic consumption side, and more investment coming in on the China +1 as well as the PLI schemes should benefit us.
Suchitra Ella, we've all been awakened sort of rudely, if I may, because of the pandemic to the importance of healthcare. But sadly, governments across the world do not tend to invest as much as they should in healthcare and education. In the case of India, for example, even today, out of every 100 rupees that the government spends, only about 2 rupees go into healthcare as well as education. Is there now increasing consensus in India and around the world that you need to amp up your social sector spending just as much as we spend on physical infrastructure? Social sector infrastructure is also absolutely important, and therefore our health and education spend, which currently is 2% of GDP thereabouts, has to amp up in a big way. The government has the elbow room, both in terms of the tax collections that it has, and of course India will continue to be the fastest growing economy for the foreseeable future. So should we amp up on our health and education allocations in a far bigger way?
Certainly, Zakka, Jacob, good evening. Unfortunately, maybe it took the pandemic to kind of, remind us as to, where we allocate or how we allocate our funds, especially when it comes down to the healthcare and equitable distribution of pharmaceuticals and vaccines and other healthcare products. And for a country this size, the demographics are so mind-boggling that even a percentage of our children's population, a particular segment, if I should say even the 15 to 18 population of the children that we have, the young adults, if I have to call them that, is equal to the population of the entire country of Great Britain, England. So we can just imagine what the scale and the size or the magnitude of the demographics we have as a country, as a population that we are right now. Having said that, our own birth cohort is also something which is extremely up in numbers. We are somewhere at about 27 million children coming into the population numbers each year. So because that we know for sure is also one is because of the consent, the statistics and the numbers that we get from the public health departments, but we also being providers of immunization, especially in the pediatric segment, to the national immunization programs, which is the universal immunization programs. We have at least about a good 12 different vaccines that the government of India procures for this entire birth cohort of this country, and which is distributed across the country in all the regions. So this is a very huge number. Our spend right now is very, very minuscule. Comparatively, it just pales in front of the numbers that we are looking at. Economies and countries that have smaller population demographics, but have large healthcare spends, are very evident in front of us. And I think the time is it's right time right now to look at think big and think scale and think in terms of how we can make it a robust spend in terms of healthcare. And education,
All right.
of course, goes hand in hand, because there is healthcare and medical education, which is very important, again, which comes back to our own, the entire gamut of healthcare and pharmaceuticals and the entire life sciences sector as a whole. So there's a lot that we need to catch up with in terms of what we see around in the rest of the world in comparative economies. I'm not looking at the G7, and I'm not trying to make a pitch here. I'm looking at what is comparable in terms of our own, size and scale of economies in the countries that we all have. And I think we need to certainly look up at about 3% of the GDP by 2025 to ensure affordable healthcare, and look at a lot of other interventions that need to come up in terms of bringing in Tier 2 and Tier 3 cities.
Let me go back to Mr. Sanjeev Bajaj. One of the areas, of course, where the finance minister does have elbow room is in tax collections. It's been very buoyant, both direct tax collections and indirect tax collections. The target that she had said was 14.2 lakh. By the end of December, we're already crossed 11.35. And in indirect tax as well, I mean, GST collections have been over 1 lakh crores for the last 12 months. 13.5 lakh crores is where we clocked at the end of December. Do you reckon, though, Mr. Bajaj, that given, the looming recession, given that people are still sort of figuring out recovering from the pandemic, that one of the areas the government hasn't done much in the last 8 years is tinker around with the tax rates or the tax slabs? Is there elbow room to do that? Would the government be tempted to do that, given that this is the last big budget before the election of 2024? Mr. Bajaj. All right, I think we've lost that audio link with Mr. Sanjeev Bajaj. We'll try and see if we can put that back. Mr. Sanjiv Puri, if you can hear me, you want to take that question?
Yeah, sure. So, that is correct, that we certainly need to put some more, it's desirable to put some more money in the hands of particularly the middle class, because they have been the ones that have been hit during the pandemic. Inflation also is elevated, while we know it's cooling off, but prices are certainly higher than what they were pre-COVID. So I think there is merit in reviewing that, so that there is more money available in the hands of the middle class. And it will also certainly help in boosting consumption and provides further impetus to capacity utilization, which is also in a decent situation right now, and therefore can again accelerate private capex. So I would say yes, I would agree with that. Yeah.
All right. If we've got Mr. Bajaj's line back, all right, we'll try and go back to that in a moment. Mr. Chandrajit Banerjee, of course, one thing that industry looks at every budget is the capital expenditure outlays. I think for FY23, the target that the finance minister had given was a very aggressive 19%, almost 7.5 lakh crores is what was allocated, and looks like she will meet that target. Do you expect the government to continue with this aggressive pitch on capex, because that is ultimately the true generator of not just physical infrastructure but also employment therein?
Yeah, so there are two aspects of it, which are very important. And as you said, public capex has been a single most driving factor for the economy over the last couple of years, and that has really helped the economy, Indian economy, being so strong. And it's been on track, 2.7% of the GDP, and that has had a crowding in effect of private investment. And as I see today in our surveys, we are looking at across sectors something around 75% to 85%, and in certain sectors even upwards of 85% private capacity utilization, which means that private sector is all about investing fresh, and there will be further more, in fact, of private sector investments coming in. And also, if you really look at the fact that the credit growth for MSMEs has grown by something around 30+%, 30.6%, I think, in the first 9 months of FY23. That itself is a very strong indicator as to how public capex has been helping. So government clearly should continue its focus on investment-led growth, but I think government has done the heavy lifting. Private sector will now, as you will see over a period of time, that will come in very strongly. And I once again would like to underline the importance of timely implementation of the NIP using Gati Shakti platform. That itself would be very, very critical and important.
I think the line with Mr. Bajaj is back. So I want to put that question to you as well, whether the finance minister has the elbow room to try and do the one thing that the Modi government hasn't done enough of in the last 8 years it's been in power, and that is to tinker around with the tax structure, whether it is making it easier, more simplified, fewer rates, fewer slabs, because both direct and indirect tax collections are very, very buoyant.
So yes, you are right. The direct and indirect tax rates have been buoyant, and there's no reason to expect that it will be different going forward. But the rationalizing of tax rates, one at the lower income segment, as I mentioned at the beginning, is important to provide relief to people at the lower income. So that's one point. The second is that we are really seeing a huge opportunity for India to end up becoming that manufacturing base that the rest of the world, especially the developed world, is looking for. And towards that, whatever we can do to further improve the ease of doing business, to reduce the cost of doing business, including on taxes, simplification. Today there are 65,000 compliances. A number of them have criminal linkages with them. Clean all this up, make it easier to do business in India so that we can attract investment both from domestic businesses and from international businesses. So we think this is important, not just from a one-year perspective, but keeping in mind that the long runway we have ahead of us for significant growth coming from manufacturing for India and for the world.
It's interesting. So let me put that to Mr. Dinesh also, because given all these, recessionary clouds, as it were, that are looming, and we're seeing the effects of it certainly in the Western economies. If you look at the trade deficit, for example, it contracted for the first time in 2 years. This was data released in October of 2022. Exports had declined 16% to just a shade under $30 billion. Imports had grown at 5.7% to just above $56 billion. So the trade deficit was somewhere in the range of $26-27 billion. At a time when we are seeing the global economy soften, and there is this general trend, as Mr. Bajaj said, of companies wanting to do that China plus one. What is it that India needs to do to A, weather the immediate storm, and more importantly, be prepared for the medium-term gains that are out there to be taken?
Yeah. So I think Sanjeev already mentioned that as an approach. But if you look at it, I think it's a long-term game, meaning in the sense it's a 3 to 5 year game. You will definitely start seeing results in the short term, but you have to wait and play that game. So what is that? That is obviously to make sure that we use the right product portfolio, and that's where the PLI scheme has come in to benefit that, to make sure that we have those which are domestic consumption and an opportunity to be exported out. And I think that we started with automobiles, we moved into the subcomponents of that. We then went to today into the phones. We now covering the pharma sector. And I think the economic survey covers at least 3 or 4 of those where we actually see significant investments having been committed. And you will start seeing the benefit of that over, I would say, the next 12 to 24 months.
All right.
But having said that, I mean, we already have, I would call it, done a lot of work in terms of preparation from a financial incentive side for the PLI. But can we also make sure we also protect from a supply chain side, which is where the Gati Shakti program comes in? And finally, if we can bring the, I would call it the clock of the digital solutions around that, which can differentiate India, I think all of them coming together will make us not just the country of choice, but also the place where people wish to invest going forward.
Okay, we'll leave it at that. Thank you very much, Mr. Bajaj, Mr. Puri, Mr. Dinesh, Mr. Banerjee, and of course, Dr. Ella for joining us. And we'll be in touch with our CII panel tomorrow as well, after the Finance Minister presents her budget. All eyes on Nirmala Sitharaman. I also want to go across to 2 very special guests who are joining us in this second part of the program. Naina Lal Kidwai is chairperson of Rothschild & Co. and former CEO of HSBC, and Gurcharan Das, former CEO of Procter & Gamble and leading economist, will also be joining us. Let me start with Naina. The big question, again, I keep going back to this because this is an important year. It is an election year. It is the last big budget, the last full budget before the elections of 2024. And we are seeing pressures both on the current account deficit side as well as on the revenue deficit side. Do you see the finance minister being able to have the fiscal elbow room to continue with the massive capex spending and outlays that she's had over the last 2 or 3 years, as well as at the same time making sure that, for example, the vote banks that are important for this government, whether it's the rural, the poorer, the women, tribals, etc., are also, there is something in them for this budget, keeping this fiscal tightrope going?
So if you look at growth, I have no doubt, also looking at the language of the economic survey, that growth remains central to the government. And whatever we do, fiscal glide path included, and I am very much in favor of announcements of some reining back on the fisc, particularly given the high tax collections we've had. But this cannot be at the cost of growth. And that is the tough juggling act that our finance minister has before her, because she's clearly committed to growth. But how does she manage that within a fiscal glide path as well? Yeah. So I'd be interested to see what that comes out at in terms of the fiscal glide path. Now, let's not forget the challenges we have before us. There are global headwinds. Mm-hmm. So there's no doubt that, India looks like the fastest growing economy. I have no doubt that given that we don't get too much of this headwind impacting us, that we succeed. And the headwinds and aftershocks are there across the world. Potential recession, however light, and that impacts our exports. The good news is that inflation seems to be far less of a concern right now in our country. Food prices have come off. Yes, interest rates moving up has a bit of an inflationary impact, but hopefully not one that is going to take away too much from the household's pocket, or indeed impact our costs. And the good news is input costs are also on the way down, particularly energy costs. Mm-hmm. Of course, that is a very volatile part of the world right now. We really never know when it blows up again the way it did last year. And we are extremely vulnerable when it comes to our energy bill. So where we, I think, can look at some improvements possibly is we had brought in import costs, often a cry from industry to protect, and indeed there was some dumping happening which needed controlling. But we've also seen how import costs impact inputs into exports and inputs into production, because our dependencies on import of components, parts, it's quite high, inputs, APIs in the pharma sector, I mean, you name it, are pretty significant.
All right. No, so I want to ask Gurcharan Das this. Same time last year, if somebody said inflation was going to be the top priority, we would have all laughed it away. But look at what's happened over the last 6 to 8 months, including the RBI, all central banks around the world. This has been the number one concern. Even the economic survey table today, it does say inflation will come down compared to last year, but it is still outside the RBI's sort of comfort zone, if you will, of 6%. In an election year, and we all know that inflation hurts the poorest of poor the most, what can the government do to make sure that the inflation is mitigated to some extent on the lower sections of society?
Well, I think that really government's ability to answer that question, the government's ability is very limited. Frankly, even the budget, the flexibility that the finance minister has is, we don't realize it, but 75% of the budget is already done, meaning that if you take the cost of interest cost on debt, that's 30%. Then you add on to this the salaries that have to be paid. Yep. Then you add on to that defense expenditure, which is not negotiable. So really it is limited. But nevertheless, as Naina has pointed out very properly, that there are a lot of positives, and even inflation, I believe, is coming down. It's not something that's on top of the mind. The real issues with this budget are, Zakka, whether we're going to go for reveries or whether we are going to go for naukris. Are we going to really go for growth, or are we going to do fiscal consolidation? Is the other point. Okay. So being a pre-election budget, I would hope that Mr. Modi would really show the credentials that he has shown so far, and this government has been very prudent. They have, during COVID, everybody wanted so much to be given away. Correct. They were very prudent in the way they managed the COVID crisis, I think, fiscally. And similarly, I would say that even now, in the last few years, infrastructure spending has been good.
Correct.
That's the right way for the long term, because ultimately the answer for India is to create jobs.
Correct.
And so we have to, within the fiscal constraints we have, and they're very real. Naina was talking about the headwinds. Those are very real. 30% of the world economy is about to go in a recession. And so that could really destabilize things. However, our situation is better. We have the sufficient reserves. And also we have to, and if the tax buoyancy keeps up the way it has done in the last few years, then she has room for doing the right thing, which is continue the push on infrastructure investment, which has been there. Then the NIP, the pipeline, infrastructure pipeline.
Correct.
So there's low-hanging fruit there. Keep the momentum there. Growth will come. Meanwhile, tell yourself that, look, this year I'm not going to be able to lower the fiscal deficit. 6.4, I think is what we hit. Let's hold on to 6.4 and give a roadmap of how we're going to go to 4.5 by 25-26, which is the target. And that will be, I think markets will cheer. People will understand that we are going for the long term.
I do want to know from you, though. I do want to know from you, though, Mr. Das. One of the concerns, and Ms. Kidwai also pointed out to these global headwinds, as it were. We are seeing, recessionary tendencies in the US, in the UK is, for all practical purposes, in a recession. We are seeing tech layoffs, for example, even here in India. Does the finance minister have the elbow room to try and soothe the pain of the middle class, as it were? One of the things, for example, and I asked this to the CII panel earlier, she has elbow room as far as tax buoyancy is concerned. Direct taxes, indirect taxes, both at record highs. Can she put more money in the hands of the middle class?
Well, I think people are expecting that we should move to a 5 lakh
slab
level of and that exemption.
Yeah.
But beyond that, I would just say I'm against all exemptions. That I would rather that we have equality amongst people who earn so much, they pay so much % in tax, everybody. These exemptions really distort things. And so we should try and reduce, just as we should have taxes on all asset classes the same. So whatever you pay on, if it's 10% on long-term equity, let it be 10% on debt, let it be 10% on real estate. All. In other words, don't distort the economy.
Yeah.
And let people make these kind of decisions that are clean and clear. And so that would be from a tax point of view. But let me come back to the real issue here.
Okay.
The real issue is that we can't take our eyes off the ball, that we have missed the Industrial Revolution. 30 years after reforms, We have grown very respectably at almost 7% for 30 years. For a democracy, that's amazing.
That's not bad, yeah.
Now, but what we missed the Industrial Revolution. Therefore, we did not create enough jobs. The 16% of GDP is not enough. That's a failure. The only way to do it is the way shown by the Far East countries, which is the export of low-tech, labor-intensive manufacturers.
Okay.
And it's a big opportunity still. $25 trillion of goods are exported. And even though our exports in recent years have boomed, but really we are very small.
Absolutely. I think you're right about that. We need job-intensive growth. That's the one area which the government needs to work on. We'll leave it at that. I'm sure you'll join us tomorrow as well, Mr. Das, because I'm completely out of time right now. Like I said, it's going to be a fascinating budget. This is going to be the fifth one that Finance Minister Nirmala Sitharaman will be presenting. As far as the history of budgets is concerned, it is the 94th budget that will be presented by the Finance Minister. It, of course, started even during the British time. We'll take a quick break. When we come back, we look at the history of how the budget itself has evolved, from the text to the presentation, and, of course, the areas of concern and areas of highlight as they were. Quick break. We'll see you on the other side in a couple of minutes.